Hi, Tom Peregoodoff here from Apollo Silver Corp. New US-based silver story that I want to talk to you guys about today. New company, completed a big financing in July, and we're just getting our feet in the ground and away to the races.
Tom, good to see you. We've not met or spoken, but I know a lot of your board members and advisors. You've assembled the A team.
We have.
What's the plan?
Well, look at, around the plan, we've now got the assets put together. Focus is on the US. We've put together some tremendous resources down there, bought off Pan American and the neighboring property off another private holder. So for us now, focus on declaring the resource and looking for that sort of revaluation that we'll get when we get that resource declaration done.
Right. To what end? Because it's a slightly different model. You're not an explorer, right?
Look at and I think that's one of the keys of this opportunity is the fact that it is not an early stage exploration project. We've inherited about 44,000 meters of drilling and the associated results at Waterloo and Langtry, and those are the silver projects in California. No, so for us, it's about get that resource declared and start moving into pre-feasibility. So it's really a development story.
Pre-feas. Okay. So you're an old news story.
Look, everybody says, why don't you do a PEA? And look, maybe we will. I've always found that PEAs, the market is starting to, I think, look at PEAs a little bit jaded these days. And yes, it allows us to talk about economics, but at the end of the day, I think advancing and getting the funding and moving forward into pre-fees is the right way to
do it. So there's no, people say when companies skip a few stages in terms of the studies and the ensuing data that comes with it, it's problematic. You're saying PEA doesn't have the kudos it once was, plus or minus 30% in terms of the numbers. So what's the point? Okay,
what's the point?
Right. We'll come back to that. You've got something which you want to you want to advance this resource to a size and a scale where you can do something with it. Again, people would usually come on the show and they go, "Hey, I've got an old 4311 from 2013. We're just gonna
dust it off.
It'll be fine, no problemo."
Sure.
Right?
Sure.
We hear that a lot. So what's different in your case?
Look, the difference in our case is the confidence we have in the database that we've inherited, okay? Stantec, who will be our independent group for our maiden resource declaration, have come in and they have declared to us they don't need any more drilling, they don't need any more re-assaying, that they are comfortable declaring that maiden resource on the data set that we have inherited.
Well, give me more on that one. If you're paying their bills, they're going to say what you want, aren't they?
No. They are only one of about 6 or 7 different groups that we have spoken to. And some of them not in the running for the work, but the advice has been because of the SARCO, which was the original group that did the work and made the discovery back in the late 70s. Pan American then did a bunch of re-drilling and resampling and dragged their 44,000 meters of results into the modern era. Right. The groups have turned around and said, your database is good. So it's going to save us a lot of capital on re-drilling and allow us to redeploy that capital on resource expansion opportunities. But I think more importantly in today's day and age is we're not going to be beholden to the assay labs, which, in case you don't know, people are waiting 14 to 16 weeks for turnaround of assays. So, we had going into this thought that we'd be declaring this resource probably third quarter of 2022. Stantec have just come back and said, no, January, February timeframe.
Okay.
So,
saves a lot of money. Saves a lot of money.
Saves a lot of money, it saves a lot of time.
Okay, and talking of time, could you have timed it better? 2021 wasn't what the precious metal market was expected to be. In terms of printing money, the world economy, should have been the time for precious metals. That surprised you a bit?
Look, it does, and I'm not going to try and predict the relationship between precious metals and macroeconomics. I will say this, in a span of 5 days in July of this year, we built the book to 90 million. We cut everybody back and raised $52 million. So for us, the timing was quite good. I think looking forward, you saw in October, numbers came out, 6% inflation in the US. Haven't seen that in 30 to 40 years. When you look at the industrial applications of silver, in the greening of the economy, you can't build. You want solar panels? You need silver. Electronics, high-tech type applications because of the conductive properties of silver. I think planets are aligning for silver moving forward, and I think our timing is superb.
I think the utility of silver is obviously suggests that demand will be there, which is all good news, given it's a kind of erratic history.
Yeah.
So your view is we were able to raise money quite easily. That's got to be, like I mentioned earlier, the A team came to play here. That's what they're backing. What are they backing in terms of what you're going to do with it? Okay, so you got to start good quality data, but so what?
Look, what they're backing, I think, is the risk profile of the project. They understand that it is not an early stage discovery risk. It's a resource conversion and permitting risk. They understand the resource conversion risk, and they're comfortable that the A team is going to manage that. Okay. When it comes to the permitting risk, a lot of people out that I'm sure you speak with look at California and don't understand California. Everybody thinks Napa Valley.
Okay. Well, they think two things. They think there's a lot of historic mining and anti-mining, and they don't know where to sit. Right? So what's the truth?
Look, the truth as anything is a bit more nuanced than those two end members, okay? And it very much depends where in California you are. We're in San Bernardino County. San Bernardino has more operating mines than any other county in the continental US, okay? Now, granted, a number of those are aggregate, Cal Portland for cement, Mitsubishi, et cetera, but the fact remains they are familiar at the county level with resource development. Okay. And very supportive of it.
Okay. So supportive at a state level?
Yeah, at a county level.
At a county level, but state level variable?
Look at manageable. There's no doubt that the California politics are, as we in Canada say, blue. But we're in San Bernardino. It's a very, very conservative part of the state, and it's very red. Okay. And so we will build on that support. When we start to engage with at the state level, we'll leverage that support.
Okay, and where does silver sit in terms of the Biden
critical mineral?
Critical mineral, green minerals, etc. Because it's like we want it, but not in our backyard. So it's
we can. That's conversation for another day. But as far as the approach that Biden is trying to sort of drive through, look, at the end of the day, as we all know, the greenest mineral is the mineral you find in your own backyard. All right, you don't have the associated costs if you're going to be shipping in raw materials from around the world, well, somebody's got to pay for that, and somebody's going to be buying the diesel to put in those ships. So I think the U.S. will come to realize that they can't be beholden to other states to provide these critical minerals as they look to green their economy.
Right. So talk to me about the share register. You raise the money easy, cut everyone back. Yep. Sounds great, right? Yep. But you need a bit of volatility. You need
you got to make a market.
You got to make a market. Absolutely. So where do those shareholders sit now? What's the split?
So look, at right now, the registry looks roughly about 28% institutions. Names like Sprott, Jupiter, who you guys will be familiar with. Yeah. Some very big names that are happy to hold and support stories. We've got about 18% in the hands of the insiders, Andy Bowering, people like Simon, myself. The management have been behind the story. And we've got about a third, roughly 30% in the retail hands. Okay, so
North American?
Primarily Canada. We are opening up in the U.S. and the plan, down the road is to look at uplisting on the NYSE.
That would make a lot of sense.
It does, because it's a U.S. story. We went into this thinking it was going to be attractive to U.S. institutions and retail. And look, I can tell you that, you know, that has proven to be correct so far. The institutions love it. And the retail are starting to get exposure to it, and they like the story.
Okay, so let's talk about what you're going to be doing with that money, because, like I say, it's a nice chunk of change.
Sure.
You raised it at a nice price.
Yep.
Yeah, and you've seen some movement there in the market as well. It's great news. So, how are you advocating that you spend that today in this market, leading into whatever it is that you're trying to deliver next year?
Look at the majority of our working capital, which is about 16.5 million right now, is going to be focused on the Calico projects, which is Waterloo and Langtry, and it's going to be on doing the drilling to do some resource expansion. Okay. And to actually also move the resource from what I think will be a mixture of indicated and inferred when we get that maiden declaration out, and advancing that into measured and indicated, which is going to take drilling. So, you know, in the back of our minds, we've got sort of 15 to 20,000 meters of drilling set aside for that activity. The other big component of the project is going to be metallurgy. Yeah. So we've got we're planning a metallurgical program. We'll be taking some samples either through surface trenching. There's a lot of historic workings that we may try and access if we can do it safely, and potentially some large diameter drilling to get the samples, because that's going to be one of the other key technical aspects of the project. Right.
And so talk to me about the timing of. Okay, you talked about early. Let's say Q1.
Sure.
Q1. Okay.
Sure.
Which is all good news. Straight into PFS. Are you accelerating the PFS? Are there shortcuts there, or we now start to follow the rules?
No. When did a preliminary economic assessment become a rule? I'm with you. Don't build a mine on a PEA, but no. Look, yeah, there are certain technical risks that you can only mitigate with a fairly thought out, tried true type approach. Okay. Yeah. Look, on the metallurgical side, the last metallurgy that was done at the project was 40 years ago. Now, I'm not a metallurgist, but I can't help but think in 40 years, certain technologies have advanced a little bit. So we'll do a lot of work in that space. And, you know, the drilling, it takes as long as it takes.
So, but there are delays at the moment. So in terms of, you know,
and we're not going to try and take any shortcuts.
Right.
You know, look at we don't have to. We really don't. Again, because the discovery part of the process has been completed. You know, normally that's anywhere between 2 and 5 years before you get that resource declared. Well, that's in our rearview mirror.
That's even if you make a discovery,
and
right?
that's if you make a discovery.
Yeah. So you kind of shortcut the process at the beginning, which is great news. You probably saved time and money in doing that. So that's also good news. Yeah. But you are going to be more conventional moving forward.
Yeah. And, you know, look at, there's still a debate that's going to be had at the board level around whether we go forward with a PEA or whether we just move straight into pre-fees. Yeah. And the two aren't mutually exclusive. Sure. You know, the work that is going on to do your PEA is generally take the resource, and it's a lot of desktop type work. Well, I can still be out there doing the drilling I need to advance the resource as well as get the additional metallurgical sample.
Yeah, I think it's an interesting debate to have internally about, you know, how sure you are, because we've seen companies trying and skip the PEA stage, and it's cost them further down the line, right? Yeah. I get you've got a bit more certainty around the data that you've got here, and you feel, and with the team and their track record, you probably feel you've got permission to do so. Yeah. Right. Okay. Yeah. So you're over here. You're having a few meetings.
Yeah. Yeah. It's a busy couple of days.
Conference across the road.
That shan't be named.
That shan't be named. Are they busy? Has everyone shown up?
Look at you know, it's been 2 years since I've been to it, so I've
been running and screaming and kicking together after 2 years. So
I've got to tell you that it looks fairly well attended. Yes. I'm glad. My dance card is full, which is for me, it's been well worth coming over. Great chance to meet new people.
Absolutely, the great and the good, right here. Tom. Great catch up. Lovely to meet you and hear this straight. It's just the beginnings. Come back on and give us a full proper breakdown.
Absolutely.
At some point.
I look forward to it.
I'm sure we'll arrange a date to see.
I look forward to it. Thanks.
Cheers.
Alrighty.